Today we're going to go over 3 steps to get approved for a DSCR investor loan. Hi, this is Hard Money Mike. Today we're going to go over DSCR loans. We use them a lot to get out of hard money with fix and flips that maybe you want to keep, or even investor loans. We want to make sure you're not only getting good hard money, but you're also getting loans like DSCR loans. DSCR loans are a little bit different than traditional loans. They each have their own guidelines, but they have the gatekeepers, and the gatekeepers are looking at 3 things when you're looking at DSCR. Not surprising, the number one thing that they're going to look for is your credit. Where is your credit score? And I put credit up here because it's not only your credit score. They're going to make sure and look at your history. Were there foreclosures, bankruptcies, anything like that? The lower your credit score, the more derogatories you have in your credit, the harder it is for you to get the loan to values and the rate that you look for to make sure it cash flows. What they're looking for is credit typically in the 700 plus. Yes, in this market at the end of 2022 going into 2023, there are products out there that go as low as 640. 6 to 12 months ago, there was products that went as low as 580. Credit scores matter as things tighten up. The difference between a 640 credit score and a 740 credit score is somewhere between 5 and 10% on your loan to values. The lower your credit score, the less loan you're going to get. Also with that lower credit score comes higher rates. If you want the best rates, if you want the best loan to value, you do have to focus on your credit and your credit score. There's ways to improve it. There's ways to quickly improve it. But if you're in real estate, and you're in real estate investing, not only DSCR loans, other loans, the better your credit score, the better the terms for your loan. The better the terms for your loan, the better your cash flow is. Less money coming out of your pocket for down payments, and more coming in every month because you're paying less on your interest rate and your loan. The second step of these 3 steps is money. They want to know how much money you have down, or if you're doing a refinance, equity. But they also want money for reserves and closing costs. On a typical DSCR loan, not only do you need the money down, so if it's 20, 30%, depending on where your credit is again, you're also going to need money for reserves. Reserves are typically 3 to 6 months of your mortgage payment. They want to make sure if something happens to that property, it becomes vacant, you can't get it refilled, you have to do some work on it, that you can make the payments when someone else is not. When your tenant leaves, they want to make sure you take care of that. So when you're looking at being prepared for DSCR, make sure you understand how much money you need for the down payment and then how much money you also need in reserves. So number 3 for the quick steps here is know your numbers. What numbers do I mean? What they're looking for in DSCR is a property that breaks even. What your rents are have to equal at least your expenses. When they look at expenses, what they're looking at is the mortgage payment, the taxes, the insurance, and if there's any HOA. No utilities, no property manager, nothing like that. They're looking to make sure you understand your numbers, and you should know your numbers, because if it doesn't break even, there's products for that, there's DSCR products for that, that even on non-cash flowing or negative cash flowing properties, they have products for that. But you have to understand it comes with rate increases, lower loan to values, all of those things. On the other side now, if you have a property that's cash flowing 1.25, which means if you have a property that all of your expenses are $1,000 and you're getting $1,250 a month, you may get a little bit better rate. You get to $1,500 coming in from a property that's costing you $1,000. There's lenders out there who'll even give you a quarter or half a point better. They understand there's less risk when your rents are higher than what you're owed. I mean, that's just typical investing 101. Over the last 4 to 5 years, it's been harder to make sure properties cash flow that extra $500,000, $2,000 a month, depending on the size of the property. So the 3 steps when you're looking for a DSCR loan, make sure your credit is there. Anything in the mid 700s is ideal. Make sure you have the money not only for the down payment, but for the reserves, even if you have to borrow it or have a business partner bring it in or a family member. And make sure you know your numbers. Make sure this is a cash flowing property before you go in. Don't be surprised. Before you go get approved, make sure this is a property you actually want, and make sure there's money coming in instead of just going out. Remember, our focus here at Hard Money Mike is to make sure you get into the right loan for the right project. If you have a question or if you have a loan, a project you want us to look at, our email's below. Reach out to us. We're glad to help.